Hello, everyone, and welcome to the Anarchy Day Trading Podcast. Hope you all have been doing awesome. I know I have. I know Jordan has. It's been a little while, but appreciate you guys joining. Today is a really big topic. It's talked about a lot. We talk about it a lot, but I wanted to do a deep dive because it's a really, really important topic. Risk management. It sounds boring. Frankly, it is. But is it the secret sauce that everybody talks about? I know every time I go on to day trading Twitter or X, um, everybody's talking. I see a million posts about, hey, just if you just do risk management, that's the ticket, right? It's all about risk management, just properly managing your risk. And if you just do that, you'll succeed. Is there some truth to that? Is that not true? Where is the line? How do you properly manage your risk? And what does that even mean? Jordan, what's up, my friend?
Nothing much. Nothing much. Just enjoying, looking forward to this conversation, especially because risk management, as you said, is kind of something that everyone just kind of treats as like a mantra, or people like to talk about it because it makes them feel smart or sound like they're educated. But the risk management most people are talking about, it's just like, oh, just have a really high risk to reward ratio. That's not really what risk management actually is. So really looking forward to having you maybe take a deep dive to explain maybe what it is and what it isn't. Because as I said, anyone who says just you just have to have a really high risk to reward ratio, no. As we have explained just a few weeks ago, um, taking lower risk to reward trades actually may give you a slightly better statistical advantage.
Yeah, it definitely does. To just briefly recap that conversation, when you're talking about, especially to beginners, kind of one of our most listened episodes is the one on one-to-one risk to reward. This is when I first started playing around with lower R to R. Um, and people, it resonated with a lot of people. This is when I started discovering this, but discovering, hey, for beginners especially, lowering your risk to reward will help you survive longer simply because it ups the amount of successes you have. And the less failures you have strung together, the less likely you are to blow accounts and everything like that. If you're taking higher risk to reward stuff, you're going to have longer stretches of failures in between, and thus multiply by a lot your probability of blowing accounts. So anyway, that's brief summary of that. That is, you're right. That is kind of, I think, how a lot of people view risk management of just, hey, risk a little to win a lot, and therefore you're managing risk. And that is completely not true. First of all, it's actually anti-true. I think it's exactly the opposite. But also, it's missing out what actually risk management is and what it means. So I guess I'll give one small bit. Risk management is a few different topics, and we'll hit on a few of them. It's a few things kind of together. It's a threefold strand. It's a stool. Whatever you want to call it. A few things that hold risk management together. But one of the things that holds risk management together is simply playing defensively. So one of the ways I define risk management is avoiding losing a lot. That's that's all. So this actually comes down to this is actually one of the reasons I view taking lower risk to reward trades and upping your success rate as a form of risk management because it's mathematically you give yourself a better chance of not blowing accounts, not stringing a bunch of losers together and hitting your drawdown. And so actually one of the things that I take as risk management, as a proper use of risk management, is taking lower risk to reward so you smooth out your loss curve.
Yeah. And for me, risk to reward is honestly a mindset. Like risk management to me is a mindset. It more than actually anything physically you're doing. So to me, risk management means not trading when when you know that you have a low probability of winning. So for instance, if you lose two in a row, the chances of you then doing really well after that, at least for me, Levi, pretty much everyone that I know. I mean, I'm sure there's some anomalies out there, but if you lose two or three trades in a row, uh, you should not be taking more trades because guess what? That's probably just going to end up being revenge trading, and it's not going to end well. So another thing to remember when you're about talking about risk management is not just, okay, I'm going to, can only risk this much money per trade, but it's really about am I giving myself the best chance of winning?
Yeah. So one of the main things, and you mentioned it, of risk management is simply not betting too much, right? So you're trying to avoid, and there's different percentages you can look up. Hey, how much percent of my account should I risk on each trade? It changes wildly between people. It depends how much you trade. Depends with your swing trading, day trading, scalping. You're going to have to figure out what that is for you. But setting up, first of all, how much you're willing to lose in a single trade, but then as you mentioned, how much you're willing to lose in a single day because you start tilting. If you start losing a bunch of trades, you're more likely to lose more. That's simply how it is. You know that, I know that, and everybody listening knows that. So a big key to risk management is not just, hey, how much do I risk per trade? That is a key point of risk management, but how much am I willing to risk per day? Maybe even per week. There's been times where I've had a few days that I just lose. And when you're coming into the fourth day of the week and you've lost the three previous days, are you more likely to lose or win if you're just coming in hot like that? Well, you're more likely to lose. And so there's times where I don't have a specific rule about this, but I'll lose a few days in a row and I'll take a break. Just a couple of days break just to take a breather. That's a part of risk management, right? Like it's not just simply those hard rules for those hard drawdowns per trade and your stop loss obviously and then per day, but also there's some softer ones that you can put in there just based off of how you perform and having the discipline to hold yourself to that.
Yeah. And the best time to make these decisions on the way you should trade or risk management rules and everything for you, of course, should be made when you're not trading. These are rules that you should make on the weekend. After blowing account is probably a good time too, because it usually brings you some post blown account clarity.
Mhm.
But these are times when it's times to look back and analyze what did you do wrong and how can you keep yourself from doing that in the, later. To quote one of my favorite people of all time, before I do anything, I ask myself, would an idiot do that? And if the answer is yes, I do not do that thing. Well, you should be asking yourself the same thing every time you trade. It's like, would a successful trader do that? And if the answer is no, then don't do it. And maybe you need to set up some rules to make sure that you don't.
Yeah, I like that. Now, to clarify, I think a helpful thing to clarify when we're talking about risk management. I mentioned this right at the beginning, but people talk a lot about risk management just like being the key. It's not the key. Risk management, give proper risk management just gives you the best chances without an edge, right? You will still lose money with perfect risk management if you don't have an edge. So the perfect example of this is like blackjack, right? You can count cards all you want, but if you don't play blackjack well, you'll still lose money because counting cards perfectly only gives you a slight edge. Even the best card counters, they have a slight edge, and so they have to play kind of mathematically perfect blackjack as well as count cards, and then they can eke out uh, an edge, eke out a living. But if you're playing perfectly, there are plenty of people who are good blackjack players. They play mathematically perfect blackjack. Guess what? The house still wins. The house still has the edge, and you're going to lose over time. You'll lose less fast than I will if I tried to sit down at a blackjack table, but you'll still lose every time. So risk management is not your edge. It's not how you make money. But that paired with your edge is how you make money. Risk management just gets you to mathematically your best chance. It'll make you lose the least. And then you have to have an edge on top of that. So keep that in mind. Risk management is just meant to slow your roll downhill. It's meant to kind of help you survive, and then your edge pushes you over the edge. That's where the name comes from, and gets you your money.
Yeah, so in summary, I mean, really what we're saying and take it, the big takeaway is go back to the basics. Set some loss limits for the day. Set some loss limits for your trades. Don't view it as a flip it thing, Don't be saying, "Oh, I just need to have a big, have a huge R and R, 1 to 10." No, that's not risk management. So just set some basics. Set how much you're going to risk for the day, how much you're going to risk for the week, how much you're going to risk per trade. And then also just know yourself, right? Set some rules
Yeah.
around what you need to do when it comes to how many losses I should take. Even if, let's say you break even three in a row. Well, should you be taking a fourth trade after you broke even for three or four times? Again, I'm going to say for most of us on this podcast, probably not. But again, that's you, that's on personal. If you do have questions or you want to kind of pick our brain about, what your risk management rules are or what the process is that you're using to follow, feel free to drop us a tweet, drop us an email. Always happy to hear from you guys, and we make sure to try to respond to everyone who does email in. So feel free to drop us those questions. We'd love to hear from you and hear what you're doing to minimize your risk during these volatile times of trading in the early April of 2025. Thanks, and have a good one.